Good morning, very distinguished ladies and gentlemen. Thank you for joining the 12th session of the Financing webinar series. Today, we're discussing a very important topic, Finance Act 2021, key amendments and its impact on businesses. It promises to be a very insightful session. We've got over 200 participants registered for this event, and we know a couple of them already joining. We've got seasoned panelists to do justice to the topic of the day. And just before we get into the entire conversation with the panelists, and before I introduce the panelists to you, I'm going to make a very short presentation to give you some highlights of the talking points for the session today. Apparently, by the till end of last year, 31st December 2021, precisely, the President Muhammadu Buhari signed into law the Finance Bill 2021, which is now the Finance Act 2021. And of course, it made significant changes to the tax and regulatory laws in Nigeria. And of course, this to respond to the negative impact of COVID-19 and of course, deal with some of the issues that were in the law as they were written prior to that time. And we know that this is like the third Finance Act we've seen in 3 years. A couple of issues that have come up. At the first time, 2019, we found that the amendment was to about 7 laws. In 2020, it was he amended about 14 laws, and then in 2021, we see 13 laws being impacted by the Act. Specifically, when we look at the amendments in the 2021 version, you would even see that we have amendments to things like, or laws like the Customs, Excise and Tariffs Consolidation Act, the VAT Act, which is a bit controversial at the moment, given that we have issues around the VAT still in court. The National Agency for Science and Engineering Infrastructure Act was also amended. The Fiscal Responsibility Act was amended as well. So this has brought up a couple of issues, starting with the issue on educational institutions. Someone said at some point that if you think that education is expensive, maybe you should try ignorance, right? And when we see taxation then coming on educational institutions, what does that say to us? Does it mean that education is very affordable to people now? Are we making it more affordable by taxing it? What are the things that we're seeing with the impact of the removal of the profit of educational institutions from the category of profits which are exempt from the Companies Income Tax Act? And of course, the development has generated a couple of debates and discussions among stakeholders. From some of our registered participants, some of the questions they've sent in already borders around the taxation of educational institutions. How does it affect elementary schools, for instance? And some of these questions will be dealt with by our seasoned panelists today. Will all educational institutions, for instance, now be subject to CIT, that's company income tax, or are there some categories that will still not be liable to companies income tax? When you look at the pending litigation on the issue of the value-added tax as well, how does the amendment by the Finance Act 2021 affect that pending litigation? Some stakeholders, for instance, are of the opinion that the move to amend the VAT Act may be overreaching because there are contests between who should even be collecting VAT ongoing in court. A number of state governments are continuing to plan for powers to collect VAT. So what exactly is this amendment saying to us? And I'm sure that on this panel, I have seasoned lawyers, seasoned consultants, and of course, practitioners within the sector, the tax focus area that would speak to the issues. We also have the issue on application of capital gains tax on proceeds from disposal of shares. What you see is that as we see it now, if you're disposing shares, you need to then take cognizance of how those disposals will be affected by capital gains tax, right? And can we say that this amendment is fair at this time, for instance? Of course, there are some other rules about that. What about the digital services tax provision and its implication on the issues around OECD solution. There is a two-pillar solution, for instance, that the OECD has developed with respect to taxation of the digital economy. How exactly does the stance of Nigeria and the amendments that we've seen in the Finance Act 21, how do they interact with this OECD solution and the position that the Nigerian government is taking at this point in time? So these and issues respect to the stamp duties, and of course, who should collect stamp duties? What's the power of the National Assembly and the power of the Minister of Finance, of course, to issue regulations regarding stamp duties? Given that, especially, we also have the state governments having some rights to collect stamp duties. So why exactly should we expect that all of the rules or regulations are coming from the Minister of Finance? We have a couple of questions that I'll tell you that our seasoned panelists will do very great justice to this morning. So sit back and have a good time with us. On the panel, I would like to introduce to you some of the people that we have, the seasoned panelists that I have on board this morning. I have Michael Ango. Michael Ango is a partner and he's in charge of tax advisory and regulatory services in Anderson in Nigeria. Michael Ango is a seasoned lawyer and tax consultant, and of course, a policy analyst as well. And he's going to be doing justice to the topic from that angle this morning. I have Dr. Titi Fowokon. Dr. Titi Fowokon is the head strategic tax and compliance at Dangote Industries Limited. She oversees the activities with respect to tax in the Dangote Group, and she can be relied on as a representative of the taxpayers. And of course, speaking to us from an industry perspective, I would have Dr. Titi doing that this morning. I also have here the key regulator, I would say, the Federal Inland Revenue Service, Mr. Matthew Osaneko. He'll be doing justice from the angle of what is the FRS saying with all these issues and how do we balance things out, especially from a key regulator's perspective. Mr. Matthew Osaneko is an assistant director as well as the head in charge of policy and legislation at the Federal Inland Revenue Service. I have, last but not the least, the partner and head of commercial practice group at Anderson, Chinedu Ezomike, and he's going to be doing justice to the topic from the perspective of course, a tax consultant. He's a seasoned tax consultant for a couple of years now, more than a decade. And you're going to be hearing some very great insights from him. So I'll just encourage you to sit back and have a good time with us as we examine the topic, Finance Act 2021. Of course, we're looking at its implications on businesses and the key amendments as well. Thank you very much. I want to start right away with Dr. Titi. Dr. Titi, good morning to you once again, and thank you for joining this session.
Good morning,
yeah, we would like to hear from you from a general industry perspective. How do you see the Finance Act Amendment 2021? Is it a welcome development altogether? We know that a couple of changes have been made. I've talked about a few of them. You know some of them, or about all of them yourself. Or can you already perceive some sort of misuse with the amendments that we see year in year, from year on year now?
Thank you, Temitope, and thank you to Anderson for bringing me on this call. Let me first of all say that the reaction of the industry is mixed feelings from the point of view of whichever industry sector we're talking about. While some are seeing some aspects that are okay, some are seeing aspects that are making them to think whether this is the right time for such amendment. Let me say that the Finance Act era is a very, very laudable thing. I won't lie about that because we had this so many years ago, and then coming back to that era in the past 3 years consistently, you know, it's something that I'll give kudos to the Minister of Finance, Budget and National Planning for that. I would also want to thank the FRS team for supporting, and also the team that is putting together this Finance Act. But I must say that in the bid of trying to bring us back on track with the regular annual finance bill, there are some aspects of it which is really not going to go down well with some industries. And I would just, maybe as we talk along, I might be going into that details. While some is just like we say, mixed feeling, while some are smiling, some are frowning, some are weeping. Let me put it that way. Schools now, we have a problem with education. So I'm surprised what we're doing about saying educational institutions should start coming under the tax net. To be sincere, we've not had enough. So why are we not discouraging the little that we have? So that's the way I see it from the industry perspective. We have small businesses, we give with one hand and we're taking with the other hand. We have capital allowance restriction. So small businesses, they still are trying to understand the tax issues. Now, bringing all this on their lap, when they don't even understand all this thing you call tax, they ask and say, what are you talking about tax? So their capital allowance restriction will be a major issue for them because it means that they've lost out on that. Then bringing additional NASENI, bringing police levy, which we know we already have anyway, is just trying to put the regulatory aspect of it. But I think looking at the economy generally, let me say, I just had a recent experience and our economy is not really helping us. If you can't believe that Nigerian Naira to CFA is 1-to-1. So it could be as bad as that. So we need to also look at what's the impact of these things on the economy. Some things are there good, some we need to probably say, maybe this is not the right time to do that. Thank you.
Thank you, Dr. Titi. Some very insightful comments there. And I can already see Mr. Matthew trying to respond to some of the issues because he's brought up a couple of the issues. I wouldn't say that you're on the hot seat this morning, but of course, Dr. Titi has touched on a very important issue, the issue of educational institutions, for example. So what exactly do you think has informed the drive to tax educational institutions at this time that we're in? Mr. Matthew.
Yeah, thank you very much for that question. I've had Dr. Titi at what she said. Basically, I want to actually put this in perspective. I want to place it on record that this decision to subject educational institution to tax is solely the decision of the lawmakers. So the lawmakers in their wisdom decided to amend this provision. So that is actually the decision of the lawmakers. So it's not a proposal from FRS. So let us put that into perspective. But my interaction with them and those in the circles of government actually saw and observed that there is this dwindling revenue that is accruable to the federal government, that's accruable to the federation account. So what should we do? Should we increase taxes, the tax rates? What can we do? So there has been a lot of discussion, there has been a lot of review and discussion around how do we drive domestic revenue mobilization. Because you could see, you also agree with me, that as we speak, our budget is currently continuously on deficit budget, and also the government has no choice than to go borrowing. So in my view, in their wisdom, there is need for them to begin to look inwards and look at our tax expenditure. Our tax expenditure as a nation, as a country, is very high, very huge. So in the wisdom of the lawmakers, in my opinion, and my interaction with them, there's need for us to begin to do what they call gradual withdrawal of tax incentives. So that may have informed that decision. So that's my comment for that. Actually, it's solely the decision of the lawmakers in their wisdom. Basically, there is a work stream to begin to do the gradual withdrawal of tax incentives because it's very huge. The government actually needs revenue. So that's the comment I can have now in regards to taxation of educational institutions. So basically, it's not educational institution, the profit derived from educational activity. So let's distinguish between the institution and the profit. So what the law is saying now is that profit of educational activities are now subject to companies' income tax.
Thank you very much, Mr. Matthew. I'm sure a couple of panelists do not necessarily agree with you, but I mean, you are the right person to speak to this topic. So I can imagine how much pressure you face with that question. So I won't bother you so much about it anymore, but I know Michael would like to add a few things, and particularly I want to hear from Michael, especially from a lawyer's perspective, and of course, a policy analyst perspective as well. What do you think are the limits of the FRS powers with respect to the nature of educational institutions, or the profits, as Mr. Matthew puts it, the profits of educational institutions that are to be subject to tax? Is it, in other words, is the law, the new provision, taxing the entire activities? Is it a case of every educational institution that makes profits now needs to get taxed in a way? Do we need to consider how they are registered? Do we need to consider any other thing with respect to how tax affects educational institutions altogether?
All right,
Michael.
Well, thank you for the question. I think in analyzing, that provision, I would crave your indulgence to read out the provision of the law so that we can carry along participants. What the law had previously provided was that the profits of any company engaged in ecclesiastical, charitable, or educational activities of a public character, insofar as such profits are not derived from a trade or business carried on by such a company, was exempt from tax. Now, the amendment has, of course, removed the issue of educational institutions. There have always been issues with respect to the nature of educational institutions that could or should be taxed. If you recall the decision in American International School, I think as far back as 2014, where the Tax Appeal Tribunal held that public character simply means anything that is available for use by the public, i.e., as long as, and nobody's excluded from having access to such institution, then it is an institution with public character. But I think there was another counter decision, I think in BCIS or so, where a decision that ran contrary to AIS was given, I think by the same TAT or so. Now, the reality about it is that for me, I think even before going into the nature of educational institutions that I think should be taxed, what I'll simply say is that in looking for taxes, educational institutions should not be the first port of call for us. And let's be honest about these things. I'm a member of the Fiscal Policy Reform Committee, just like my good friend and brother here, Matthew, and he's quite right. At the committee level, we did not deliberate on this issue. And I think we can say it here without any fear of contradiction. How that came into the law, again, like Matthew has said, the lawmakers have the prerogative to make laws. It's their constitutional right or power, as it were. And once a law has been made, then it becomes the law. But again, we have to ask ourselves that at this level of our development as a country, and this is where the interpretation will then come in. So what is the nature of educational institution that should be taxed? I think the challenge for us is that when you look at some certain level of educational institutions, maybe the likes of the American International Schools, the likes of, Corona and all of that. So these people are paying 6 digits or 7 digits school fees. And then, of course, as a taxman that I used to be, those kind of figures always, they attract your attention. But it is not about what is being collected, really. It is about, is the entity subject to tax? And if an entity is not subject to tax, then it matters not what the entity generates in terms of revenue. Again, we should always note that there's a difference between income and profits. I might collect 7 million naira as school fees, but if I use or expend 7.5 million in providing the instructions or educational, services that I'm supposed to provide, at the end of the day, is there a profit? But just to answer your question, whatever the interpretation I will be giving, one thing is clear: if an entity is not set up, as a limited liability company, and this is my own interpretation, and it is subject to, debate, but my view is that if an entity is not set up as a company, a limited liability company, i.e. ab initio, a company that will be subject to tax under the company's income tax. If, for example, you organize your your educational institution as an incorporated trustee or a company limited by guarantee, then I find it a bit difficult to say that FIRS will be able to tax profits, quote unquote, of such an entity. My view is that only an entity that is set up for the purpose of making profits and then which actually generates such profits will then be subject to tax under this amendment to the Finance Act 2021. But like I said, we'll wait for FIRS to bring out maybe their circulars. They've invited us for circular review, I think next week. We'll sit down with them. Just like Dr. Titi has said, we must commend the Federal Inland Revenue Service, the Ministry of Finance, and even the National Assembly for this initiative of the Finance Act. At least it has provided us the opportunity to have annual reviews of our tax laws. The only thing we may say is that let those opportunities not become an avenue for FIRS to continue to expand its taxing powers. And then, like my good friend Matthew, hide behind National Assembly and say, oh, it is not our initiative, it's National Assembly. At the end of the day, when you collect the tax, who is going to collect it? It's not FIRS.
Thank you very much, Michael. I'll come back to you, Mr. Matthew, but I want to come to Chinedu because one of our participants is still concerned about what Mr. Matthew said, but I want to hear from you, Chinedu, from a chartered accountant's perspective, right? This person is asking, is it the revenue that will be subject to tax, or is the profit before tax? What does it exactly mean with respect to the numbers that we are saying will be subject to tax for educational institutions?
Okay, thanks so much, Tobe. It's an interesting topic and views on it. But I think Titi and Mike already spoke about the social aspects of it, i.e., is it time to subject education institutions to tax and all that. So, but looking at it, legally and what companies should do going forward based on the law now, I honestly think it is clearer now. The FIRS had even tried to provide clarifications last year, I think in March, when after the law changed to define public character, because that has been the issue. What is public character? And I think even before all these changes started happening, the intention of that section has always been to exempt companies who are tended towards more charitable organizations rather than profit-making organizations. Public character wasn't defined, and that was then the issue. So I even think that FIRS circular is still very relevant. So the question is, now that it's clear that for profit-making education institutions, they are liable to tax. The question is, for education institutions that are not profit-making, that are limited by guarantee, for example, are they also liable to tax? And it goes back to the issue of commercial activities. Can a company limited by guarantee be said to be, involved in commercial activities? I know in the FIRS circular, they try to define it in a narrow way to say the kind of income that will be exempt will be subscription fees, grants, and all those kind of things. So are you saying that if you're rendering a service and collecting fees for that service, even if you are limited by guarantee, that those such income will be, you will seem to be involved in a trade or business? So the question would then be, those companies like some of the ones that Mike referenced, are they collecting school fees or is this subscription fees? So I think those issues will still be there. And we might still have some level of judicial interpretation or something to then say, what is this a commercial activity? And if I'm providing education services and collecting fees, is that a commercial activity? So those questions will be there. But like I said, I think that section is actually geared towards an NGO type organizations whose profit, is not their main focus.
Thank you very much, Chinedu. Let me now come back to you, Mr.
Sorry,
Matthew.
Chinedu, there's an aspect of the question, i.e., is it revenue or profit before tax that will be taxed? You know.
Okay, I mean, clearly it's profit that is taxed. But you also know that once you become a taxable company, then if you don't make profits, there might also be minimum tax and all that. So, but specifically speaking, is when you're loss making, for example, you shouldn't pay tax unless minimum tax then applies.
So in other words, it could be revenue when you're talking about minimum tax, because minimum tax is on revenue.
Sorry, Tokpe. I
Okay.
think Chinedu needs to also look at this further. If you talk about revenue, talk about profits, are you saying VAT will be paid on school fees now? So these are food for thought.
Thank you very much, Dr. Titi. So much to think about when you think about these educational institutions, but we're waiting for guidance from the policy department at the FIRS so that we can, of course, contribute our quota to ensuring that the economy develops in the right direction. But Mr. Matthew, I have just 2 questions for you. Are we expecting any circular with respect to these educational institutions? 1. 2 is that, what do you think the FIRS will be doing? Will they be attempting to tax other institutions that are not registered as companies? Some of those issues have been touched on by Chinedu, by Michael, by Dr. Titi. So are we expecting any circular, and what are the things we should expect in that circular?
Yeah, thank you very much. My very good friend, Tokwe. Let me quickly state this so that we can get to understand how it runs. For us in FRS, we are guided by the provisions of the tax law. So, and the law as it is today has expunged profit derived from educational activities. And what that means is that every company or incorporation or corporation that is registered under any law that is enforced in Nigeria or elsewhere, pursuant to the provisions of Section 105, as long as you are an incorporated company and registered under CAMA or any other law that is enforced in Nigeria or elsewhere, as enshrined in that provision of Section 105, is subject to the provisions of CETA. Now, let's go straight to the question asked and also the comment from Mr. Mike. When you talk about incorporated trustees, if you go to the provision of CAMA, Section 830, Section 830, it clearly defines an incorporated trustee as a body corporate, and also defines that when you are registered as a incorporated trustee, you have a succession plan. You can be sued and be sued. That incorporated trustee for us is a corporate body subject to tax under CETA, provided that the profit of that institution is expressly exempted from the provision of tax. Now, if a company that is registered by guarantee or incorporated trustee carries on a trade of business or business of educational activities, is now subject to tax. So that's what it is today. Now, but when you talk about business name, because the provision of PITA is also very clear. The provision of PITA imposes tax on individuals, on families, on community, on trustee, on estate. So anything outside that, as long as a company is incorporated or a corporation is incorporated, under any law, go to that section that I've mentioned, section 105 of CETA and section 830 of CAMA, define very clearly. So limited by guarantee, is also a company that is registered under a law in Nigeria. As long as you carry on educational activities as it is today, the profit derived thereon is taxable. So that's the way the law is as of today. So I want to note that the difference between forming a company, incorporation of company, and taxation. The rule of taxation is enshrined in the provisions of the extant clause. So where it is not, that's why you see even charitable organization or even a ecclesiastic organization that is carrying on trade or business, most of them are incorporated trustees. So why did the law say where they carry on trade or business? As long as they carry on trade or business, you are a church or a mosque or an incorporated entity that carrying on trade or business, that entity is subject to tax. Let's get that very clearly. As long as you are covered within the confines of the law, if the law says the profit of ecclesiastical activities are not taxable, you're not taxable. So when an particular institution, a religious body, is not engaged in trade or business, what was exempted is not that institution. What is exempted was the profit of that activity. So when a religious body or an executive body or a charitable organization that is registered by guarantee, that is registered as an incorporated trustee, carry on trade or business, that profit is taxable to the provisions of CETA. So before now, like Mike I said, there are three profits that were actually exempted, three activities were exempted. Section 23(1)(c), the profit of educational activities, the profit of charitable activity, the profit of executive activities or religious bodies. Now, educational activities have been expunged. So it's now seen as trade or business. So they are no longer covered. They're no longer covered. So if a religious body that is incorporated trustee or limited by guarantee carries on educational activities as it is today, that activity is subject to the provisions of CETA. The profit derived from that activity is now subject to the provisions of CETA. So let's get it clear. The difference between getting incorporated and also the rules that guide taxation. So that is the way it is as of today. So let's so our circular will be out to provide further clarification. So if you are incorporated, go to that section. Maybe let me read out that section of Nigerian Constitution, section so that we can get this clear. Section 823 of CAMA say where two or more trustees are appointed by any community or persons bound together by custom, religious kinship, nationality, or by anybody or association of persons established for any religious organization, literary, scientific, social development, culture, and the likes, apply to the commission in the manner provided for registration under this act as a corporate body. Very clear. Subsection 2, so upon being so registered by the commission, the trustee shall become a corporate body in accordance with the provisions of section 80. And section 830 also said that that company can be sued, become a perpetual succession, as a common seal, power to sue, and be sued. So it's not covered under PETA. So PETA is, tax individuals, tax communities, tax families, tax trustees as a natural person or estate. So this is the provisions of the law. So as long as you're a corporate body, you are covered, you are taxed under CETA, provided that you are covered. As it is today, educational activities is no longer covered under section 23, subsection 1C. That is the law. So
Thank you, Mr. Matthew.
So let me just quickly just respond briefly so that we don't generate
Okay, I think I have a response to after my.
unnecessary controversy. First and foremost, with all due respect, Mr. Matthew, I'm a lawyer of about 20 years at the bar now. And I can tell you for free that CAMA is not a taxing legislation. And so whatever CAMA says in terms of how you can arrange your business affairs or the structure of vehicle that you adopt for your business affairs, CAMA cannot tax what is not taxable under a specific tax law. If CAMA says today that I and my wife are a limited liability company and you want to tax us, we will still be taxed as individuals. I think that except you want to amend the Personal Income Tax Act, or if you're telling us today that CAMA has amended the Personal Income Tax Act, I think it is trite that trustees are taxed under the provisions of the Personal Income Tax Act. But let us not deviate from the topic at hand today. We'll wait for the FIRS circular and we'll make our points.
Not trustees.
Known to the. No, Matthew, don't worry. Like I said, so that we don't, veer off. There are a lot of issues to discuss here this morning. So maybe Dr. Titi wants to say something. We can come back to this. We'll have other opportunities to discuss and, of course, dissect these issues.
Okay, Mr. Matthew, hold your sword, hold your sword.
I'm just trying to.
Okay, Dr. Titi,
sorry, let me just, I'm not saying that CAMA is tax legislation. Well, I'm just to establish that incorporation, the company was defined by Section 105. That is the base. And what is the company? The company has been defined by Section 105 as a company or a corporation registered under any law enforced in Nigeria or elsewhere. That's my base. I'm not saying that CAMA is taxing provision. I'm just trying to establish the status of Secretary of Trustees in line with CAMA. So now bring that to the mirror of the taxing provision, which is SITA. I agree with you. I'm not saying CAMA is a taxing provision. SITA, in this respect, is a taxing provision. Thank you, Dr. Kwe. I've not read this one here.
You know the general rule of taxation, you cannot write into the tax law or remove anything from the tax law. Tax legislation are interpreted on face value, and where there is an ambiguity in the tax legislation, it's resolved in favor of the taxpayer. But like I said, let us not deviate here. So maybe Dr. Titi wants to say something.
Okay, thank you, Michael. Matthew, thank you for that thought-steering comment. I have questions to just say, to go to the bottom of this. If I remember very well, our Constitution, Section 18 provides that government shall direct its policy towards ensuring that there are equal and adequate educational opportunities at all levels. Where we have inequalities, we are now having this issue with educational institutions that we are calling profit-making ventures. The question is there really profit? That's one. Then two, we talk about trade or business. What are the badges of trade? Is it really a trade or business? We need to also look at this before we now say they are into a trade. And then if we're saying that this is because we're trying to address the huge tax expenditure, government expenditure is not high because of tax expenditure. I think we need to also look at this. What is the component of government expenditure? We've been having deficit budget. What is the component of that deficit budget? I know even in the budget allocation, education is not taking significant place. So where are we saying educational institutions are now to take the brunt of this government expenditure that is high? I just want to make this as thought-provoking items. So we need to look at this. The right of education is from foundation. And if government is not doing enough in that area and other people are making, should we discourage them? Even at these so-called educational institutions, we don't have enough. Students are still on the street. So we need to look at this. We shouldn't just look at it from revenue generation angle alone, but looking at the economy and the people and the social impact. Thank you.
Thank you, Dr. Titi. Some very thought-provoking discussions there. And I must say that this is really getting interesting. But like Michael also alluded to, we got a lot of topics or subjects to touch on. So the good thing is that, I mean, in lay terms, you can see that FIRS is ready to tax all taxables. That's what I hear from Mr. Matthew. And good enough, you have Chinedu, you have Michael to support you, you have Dr. Titi to advise you.
Sorry,
Yeah.
Sorry, but just a brief, just a small comment on this. So I think I like the way Matthew articulated, his points. But but I think the question I raised earlier, is what is then a business? Sometimes it's not the activity that determines business. It is the motive. If I'm conducting an activity without any profit motive, is it still a business? If I'm set up in a way that I'm not looking at profit, so the fact that I'm providing services, does that still mean I'm running a business? And like I said, this is not even an issue of the change in law now. That has always been there. That if you're doing business activities or trade or business, you become taxable. But the truth is that what is business activity? If there's no profit motive, the way business is defined, it must be for economic profit. If there's no profit motive, is it still business?
Thank you very much, Chinedu. Apparently, we can't exhaust this subject because Mr. Matthew is out there. He's looking for tax by every means from what he said. So we can only hope that he has your ears when your clients run to you, right? So I'll move very quickly when, as we go to the issue of VAT, another elephant in the room, right? And I want to come to Michael again. What exactly is your take on the amendments that have been introduced to the Value Added Tax Act, given that there is an ongoing litigation on the powers of the federal government to even administer the VAT Act? Then I'll get Mr. Matthew to respond to that. Of course, I'll get Dr. Titi's comment and Chinedu's comment as well. So, Michael.
Okay. So what I'll say is that if you recall at the public hearing on the Finance Act, the Commissioner for Finance in Lagos State, Dr. Rabiu Olowo, actually did raise this issue. And he made the point before the Senate Committee on Finance that he didn't think it was appropriate to begin to amend a legislation that was being questioned or which had already been declared unconstitutional and was subject to litigation now at the Court of Appeal and also the Supreme Court. But the members of the Senate Committee on Finance, if I recall, particularly His Excellency Gabriel Suswan, said, look, the legislature is a separate entity or is a separate arm of government, and that the legislature has the right to deliberate on tax laws, the constitutional powers to deliberate on all laws, irrespective of what is happening in the courts. And so in their view, it was within their powers to amend the Value Added Tax Act, as it were. What I will simply say is that for us as practitioners, as consultants, and I'm sure as industry operators, what we want is certainty. What everybody wants is certainty. I'm sure Dr. Titi just wants to know where she should pay her VAT, if she should pay VAT, at what rate, and what are the items on which she should pay VAT. Likewise, myself and you want to be able to know what we should properly advise our clients on. So I'm not going to go into the specifics of whether it was right or wrong to amend the law. All I'll say is that at the end of the day, if there's a dispute on an issue, it is always to the benefit of everyone, FIRS, taxpayers, and operators, that these disputes are resolved in an expeditious manner, and everyone has certainty on what the law is. And in this regard, one of the things that we also like to advise our clients as consultants, look, if you feel sufficiently aggrieved or you feel that there's a position of law that you do not agree with, that FIRS has put forward, then it is always advisable to test it. These tax appeal tribunals, the Federal High Court, all these institutions were created for the benefit of the taxpayers. So I think what is important for us is that these issues be tested. Thankfully, this matter is at the Court of Appeal. And for us, we want this decision to be made as soon as possible. Let us know if the state should collect VAT or if the Federal Inland Revenue Service, acting on behalf of the federal government, should collect VAT. Pending that, it may be advisable that further amendments be halted. But like I explained, the National Assembly position is simply that, look, nobody can tie our hands. As long as there hasn't been a final decision to say that we don't have taxing jurisdiction over the act, if we have costs, we'll continue to amend the act. And I cannot, fault that reasoning, even if, in my view, it may not be the best approach, because it then creates the impression that you and I are in a dispute, but because you have an advantage over me, because you have the powers, you continue to amend the law to your advantage. Meanwhile, I feel that you shouldn't touch the law until the Supreme Court has told us, or the Court of Appeal has told us, who has the powers to amend the law. So that's my view anyway.
Thank you, Michael. Mr. Matthew.
Thank you, Tokwe. I think Mr. Michael actually said it all. I don't want to comment on the issue that is before the court. It will be sub judice for me to do that. As a layman, I'm actually aware that it's actually a subsisting judgment, Federal Court of Appeal, that the status quo ante should be maintained. And what is the status quo? That we all know that the VAT Act that is still running, which empowers FRS to administer VAT, should continue. And the case, as we speak, is before the Supreme Court, the Apex Court, for determination. So like I said, it's sub judice for me to discuss issues before court until that determination is made, the final determination is made, and I think I've been fixed for sometimes in May this year. The status quo ante will be maintained. That is, taxpayers are advised to continue to fulfill their tax obligation by paying, collecting and recharging, collecting and paying, filing their VAT returns, and paying relevant VAT to Federal Inland Revenue Service. Thank you very much, Satoko.
Thank you, Mr. Matthew. Dr. Titi, Michael touched on a point, and I would like to hear from you. He said, what most people want is certainty. And I'm thinking, if I was a taxpayer, as much as I want certainty, I think I want certainty in my favor. I wouldn't also want to pay the tax, I mean the VAT. But of course, the amendment with respect to VAT or the dispute is that whether I should really go to the federal government or the state government. So what exactly do you think most industry players want? Is it certainty?
Okay, thank you, Tokwe. Thank you, Mike and Matthew, for what you just said. Let me say that on a lighter mood, when two elephants fight, the grass suffers. So when governments on both sides are having this argument, is the taxpayer that they're going to put in confusion. Like Matthew said, we had the judgment on the status quo ante bellum, which is as it is from the beginning, so we stay. So most of us in the industry want certainty. We want to be sure that whatever we are doing, we are not tomorrow FRS comes and say, why did you pay to the state? And then they start giving us penalty. Be as it may, I think it is also better for this issue to come to rest as early as possible, because we want to be guided properly. There's a law we've all been used to. Let me be sincere with you. If we go to the states collecting VAT, I can imagine what would be the issues for the industry, especially where you are in 36 states. You file returns, your input is going to be an issue. Which state will you claim it from? When you sell in a state and you have inputs in another state, what can you be allowed to do? And so a lot of things are going to come up. So for us in the industry, we want a situation that is simple, is certain, and we can easily administer it. We want life to be easy for us, so we can continue to fulfill our obligation as citizens of this country, corporate citizens, good citizens, and tax compliant citizens. Thank you.
Thank you very much, Dr. Titi. Chinedu, I'll just come to you. I'm sure you want simplicity for your clients as well. So what are your thoughts on this VAT matter? How would you like it to be resolved? Or what are the issues that you see with this ongoing amendment? And the fact that it's been said over time that justice in Nigeria can be delayed forever, right? It takes a lot of time to get some sort of justice, and you know that common saying that says justice delayed is justice denied, right? Taxpayers want this to be resolved very quickly, and the grass is already suffering. What do you think?
Thanks, Tobe. I think the points have been very well made already. One of the cardinal, principles of transition is, ease of compliance, simplicity. People need to know what to do, and when they have done it, they need to know that they have done it so that they can move on. You shouldn't comply and then not be sure if you have fully complied. So certainty and simplicity is what we all want. And that's what even Finance Act itself has always tried to do, to clarify things and to make things easy to understand. But the truth is that I don't think the amendment in itself is controversial. I think to the extent that the FRS is still administering the VAT and the federal government is still taking charge up until court says otherwise. I mean, they can always amend to make it easier or provide clarities so to make it easier to administer while they are administering it. If the Supreme Court says otherwise, then I know that some states already have their draft laws, or that some has even made their own public. I think River State has made its own public. So, I mean, those laws will come into effect. So, to the extent that the FRS or federal government is still in charge, I don't think amending the VAT Act is controversial in any way.
Okay, thanks a lot, Chinedu, for that insight, especially when we then look at the fact that status quo should remain. So it may be, I mean, apt to say that since we are maintaining status quo, it's not also out of place to have the agency that is administering to have some sort of better provisions to guide them in administering. So thank you for that insight. I'll come to Dr. Titi, and this is about the capital gains tax on the proceeds from disposal of shares. So how do you think the new rules regarding this application of CGT on proceeds from the disposal of shares impact group business structures and, of course, the ease of business arrangements going forward?
Thank you, Tope. When I saw that amendment, I was like, what are we trying to do? Because this could actually be a disincentive for investments on one hand. I'm not sure our capital markets would see this as a good thing for them because we're encouraging people to go to the capital market, make it attractive. We are also looking for FDIs. So if we are putting such bottleneck, then we may not be able to achieve what we are looking at. We also need to look at the alignment of whatever we're proposing with ease of doing business. Because what this means is if you make your investment here and you are taking, you have to dispose the shares, then you're tied. Well, let me say that there are some jurisdictions where once you invest, you're locked up. I know Ethiopia, for example, once you invest in Ethiopia, you're locked up. You can't repatriate your capital gains, nothing goes. And I think maybe that's what we're trying to do in Nigeria. But will that be okay for us? That's a big question. Would it help our economy? That's another question. So I think we need to look at this with respect to investment, with respect to development of our industries, and with respect to attracting FDI. Anything that would not allow the capital market to thrive, we should have a rethink about it. Thank you.
Thank you very much, Dr. Titi, for that insight. And I think it's very good to see how tax really impacts investments. And I think this is something that policy makers need to take into consideration at every point in time, how those the provision or how do the provisions of the law really impact investment. Do we want to create an environment where people are concerned about repatriating whatever funds they've invested, or that there will be some sort of excessive taxation on whatever they've invested when they then want to repatriate their funds? Hopefully, we'll have some better engagements with the policymakers going forward, and they listen to these insights, and we have some sort of change to really get our economy going in the right direction. I want to come to the issue of digital services tax. Now I'll come to you, Chinedu.
Okay. Yeah, before we go to the digital services, just to make the point on this share thing, I think I agree with it, whether this is a good time to do this, but I think the audience should know that from the advent of capital gains tax, shares were actually chargeable from the beginning up until around 1998, when the exemption was then brought in, and was brought in to help grow the capital market, to kind of remove the shackles and allow the market to grow. And I think more than 20 years after, I think it has been impactful. I think the decision was the right one, that is exempting those gains. And I think we have seen the market really balloon. Is it time to then put it back? Would there ever be a right time to do it? I think that's the economic decision that the policymakers have to make. But I think either way, they also tried to make sure that it's only like the huge gains, like institutional investors and all that are taxed, and not the everyday Nigerians by the target that they set, up to 100 million naira and all that. So I don't think yes, it will impact the calculation of certain big institutional investors in terms of what their gains will be. But I think there are even bigger issues like being able to expatriate their funds and all that with CBN. Those are even bigger issues than the 10% CGT.
Thank you very much.
Chinedu, can I ask a question? Forgive me, but are you also looking at the potential impact on portfolio investments? You and I are aware that every day the government is crying about forex position in the country, which you've also alluded to. We also know that a lot of portfolio investors, hot money usually comes into the stock exchange and it boosts our forex receipts. Some of these investors also would either hold for a short period or for a long period and divest. But whatever is the case, those investments usually do help the economy from time to time. Do you think that this removal of the total exemption and capping it at just 100 million, which is less than 200,000 United States dollars, depending on the exchange rate you use, do you think it will encourage investments into our capital markets or general investments into securities, Nigerian securities and all of that? What's your view in that regard?
Yeah, like I said, every policy decision is a give and take. You give something, you take something. There's always something always has to give. And I was saying that while indeed, yes, by the time you run your numbers, you do your simulations, that extra 10% might impact the profit you take. But I'm saying that for those institutional investors, being able to access forex when they want to leave is even a bigger issue. And the way our CBN also turns out rules and new rules every other day, and kind of it's difficult to project into the future to plan your business. So I'm just saying that the CGT might not be as significant to them as these other issues.
So sorry, let me just bring a perspective to it. We know that the exemption on bonds is being removed. So adding that to this.
Sorry, doctor, it's not been removed. It's expired.
Oh, sorry. Let me. Okay, fine. It's expired and it's not renewed. Let's put it that way. It's expired but not renewed. So adding that to this, and let's look at the whole effect on investments, on the capital market, cost of raising bonds and things like that. I think we might need to do an holistic review rather just to look at the CGT that we're getting vis-a-vis the economic impact of these things.
Thank you very much, Dr. Titi, for that additional insight. I think it's clear that economic handlers need to look very deeply into the fiscal policies as well as the monetary policies, right? Because everything needs to work hand in hand for us to have a flourishing economy. But again, these issues are here with us. We can only hope that we have their listening ears and we work together to achieve a better economy. So I'll stay with you, Chinedu, to look into the issue of the digital services tax. And so you recall that just last year, there was the introduction of a solution, the two-pillar solution by the OECD with respect to the taxation of the digital economy. And Nigeria continues to basically go on with the significant economic presence rules, saying that they're still consulting. And I'm sure Mr. Matthew would also lend a voice to that, they are basically still consulting before they begin to implement whatever two-pillar solution that the OECD has recommended, right? How do you see this economic presence rule interplay with this two-pillar solution that has been developed by the OECD, especially if we now say the government of Nigeria says, oh, we have fully reviewed the OECD two-pillar solution and we want to go for it. How exactly do you think there will be some sort of interaction between that significant economic presence rule, which is already in the law with respect to digital services, and the OECD two-pillar solution?
Okay, first, thanks, Toby.
Can you get me from there?
Yeah, can you hear me?
Yes, we can. We
Can
can.
you hear me? It's like you are freezing.
Okay, so thanks so much. I think clearly OECD is clear that for you to be part of the two-pillar solution, you have to stop every other digital services tax and not enact new ones. So I think Nigeria has to make the call at some point when it wants to align with OECD. Nigeria was involved in the conversations with OECD. I'm aware that, even FRS had, members. So Nigeria has been aware of what was going on with the OECD. I agree that it took a bit longer than anticipated before it came out. But now it is here. The question is, what should Nigeria do? Should we go ahead with the SCP, or should we cut over to the two-pillar solution? And that call, again, it has to be made at some point. But to the extent that we are still under the ICP order, and I think the amendment to the law was just to clarify the approach that FRS will take, because FRS has always had the powers to tax the non-resident companies. So it's not a new taxation powers or a new people coming into the order. The SCPs have said who they should tax. What the amendment just did was say how they will tax them. And even the 6% that was suggested has always been there, really. The 20%, the deemed profits approach. Yeah, so that's fine to that extent. At least there's clarity. The people that want to pay taxes can pay, because there was this uncertainty whether they will have to do audited account, are they supposed to file full returns and all that. But I think that clarification is necessary. But for the long term, what should Nigeria do? I think we should start planning to align with OECD, because that will become the international best practice. And over time, we don't want to be isolated.
Thank you very much. I'll come to you, Dr. Titi. Apparently, the Finance Act 2021 has some far-reaching implications, not just for digital services, but for all sorts of services that non-resident companies provide to Nigerians and Nigerian companies. So how do you see these amendments that basically buttress the VAT and CIT implications or obligations for non-resident companies in Nigeria? Do you think that as they increase the responsibilities, the obligations of the non-resident companies, it's good for the ease of doing business? Or how exactly do you see these amendments that basically providing some more clearer obligations, I would say, for non-resident companies' activities in Nigeria?
Thank you, Tim Tokwe. I think I will want to start from where Chinedu stopped, because it's still flowing with each other. And like he said, we can't be an ocean. We can't stand alone on this matter, especially if the implementation of Pillar 2 that is looking at 2023 kicks off. We might not be at the good advantage. Be as it may, with what is going on now, SCP has impacted on VAT and CIT. The first reaction will be there'll be increase in the cost of doing business, because most of the non-resident companies would actually tell you, if they know you would insist that the Nigerian tax would be applicable, and so in negotiating, definitely they will build in the cost. So they have to also see how they can take that. So that might likely be the impact, and this may also affect investment in terms of those who are probably going to invest in services to the Nigerian companies as much as possible. We need to, while we're trying to make sure we collect our fair share of tax, we should also be mindful of the investment environment, the business environment, how easy and how attractive it is. Because where the business environment is not attractive, and any action we take with respect to the VAT and CIT is indirectly increasing the cost of our doing business, which in quotes, I learned FRS saying you cannot bear the taxes of someone else. But if I factor it into my negotiation, there's no way you say I bear the taxes anyway. You just know that my cost is going up and my contract supports the cost. So I see the cost being built up from this area. And the only easier way is for you to insist. I do insist a lot with the non-resident companies. And mind you, if I cannot meet, we cannot meet at a middle ground, you know what that means to me? My business is going to be affected. So I either bend or we compromise. So that's what's going to be happening. So this is what is going to happen. We know we are doing the right thing, making sure we collect our own share of tax. CNN will charge you VAT, LinkedIn will charge you VAT, add that cost to your cost. You know what it means. So it's going to have that impact. But I think in all ways, we should be careful not to ensure that people withdraw foreign direct investments, even though tax is not the only reason for FDI, but at least they will also look at their costs in anywhere they are doing any business. Thank you.
Thank you very much, Dr. Titi. Mr. Matthew, I'm just going to come to you. So what should we be expecting from the FIRS with respect to these rules on taxation of non-resident companies? There is now this provision that talks about assessment of their turnover to tax. I think Chinedra has already mentioned some sort of deemed profit approach. Is that what we should be expecting? How does the FIRS really want to implement the taxation, especially income tax for non-resident companies?
Thank you very much, Mr. Tokwe, for that question. Let me also make it very clear that the provisions of the law, that is, the new introduction to Section 30, was not to introduce digital service tax. We don't have digital service tax in Nigeria. We are not operating digital service tax in Nigeria. So what that provision tends to do is just to expand the base, the scope of those that will be covered for the turnover assessment in line with Section 30. But basically, we have what they call hierarchy of rules. Taxation of non-resident company is enshrined in the provision of Section 13, Section 13(2) of CETA. And the rule is very clear. The first question to ask yourself is for you to determine a non-resident company, a non-resident company carrying out digital service in Nigeria? Are they carrying on digital service in Nigeria? Maybe transmission of signals, downloading of messages and all that. If that is determined, the next thing you determine is that they have SEP Nigeria. If that has also been determined, if that non-resident company has SEP Nigeria, the next thing is for the non-resident company to file its tax returns in line with Section 55, 1A of CETA. So where the non-resident company has no present, it has the obligation under Section 55, 1A of CETA to file its returns. That section has spelled out how you file returns, the global returns, you do your computation, and it will tax to the profit that is attributable to the significant economic presence in Nigeria. After you have submitted your returns, the non-resident company has played its own part. Now, FIRS also has the duty to look at that returns and carry out various review. It could be DEX audit, DEX review, tax audit, investigation, it could be. So that provision you have is on 30, is an anti-abuse provision. It's not a primary provision. And what are the questions you ask yourself? The first question is that this non-resident has filed his tax returns. Do they have accessible profit? If the answer is yes, the next question is that accessible profit, is it less than what the board, the view of the board, the opinion of the board, what they are expected to declare? So where the board, and in their opinion, what you have filed is far less than what is expected, maybe due to other information, other information that comes to its purview. Section 30 will now be invoked. And the law does not say 6%. The law says fair and reasonable percentage. Like Chinedu said, the This 6% was a government pronouncement some years ago, and that has been the practice over time. So 20% of profit, then impose 30% of tax rate, which is about 6% effective tax rate on the turnover. So that 6% is not cast in stone because the law says fair and reasonable percentage. So where, in the opinion of the board, that acceptable profit is far less what the board expect, now taxation tax will not be imposed to subject that non-resident company to the provisions of Section 30 on turnover tax. So if you have paid tax before, the new additional tax less what you have paid. If no tax has been paid, the provision of Section 30 is now unveiled. So that is the hierarchy of rules. The primary rule is in Section 13. If you have a physical presence in Nigeria, Section 13 also spreads it out. You have a fixed base in Nigeria, you have an agency in Nigeria, but if you are carrying out digital services, the rule is enshrined in Section 13.2 and also pursuant to the provisions of the SEP regulation. So that's how it works. Then after you have done that, you file your returns, then FRS now have the duty to review what have been filed as a secondary rule. So now impose that. So that's how it works. So our circular that is soon be unveiled, we spelled out the hierarchy of rules in this respect so that taxpayers can be guided. Thank you very much.
Thank you very much, Mr. Matthew.
Sorry,
Okay.
just to say some things. It's good. In fact, I followed Matthew from hierarchy of rules to the end. But I just want to say something, and I want to use this venue to plead to FIRS. Taxpayers are going through multiplicity of reviews. You have a review for desk, you have another review from another office. Yeah, we need to be able to streamline these things. It makes it look as if everybody is a suspect until when you are found guilty. And that makes people not to have confidence in the tax administration. In terms of expectation determination, the basis needs to be very objective. At times, you are asking questions. How have you determined your expectation? We need to also remember that certainty and simplicity makes the tax environment conducive for taxpayers. So in the bid of these rules, we should also look at objectivity, simplicity, certainty, and not just make it to be a witch-hunting thing. And when the people provide the evidence, we still believe they are still lying, and it must be that your own turnover assessment that must stay. I just needed to put this on record. Thank you.
Thank you very much, Dr. Titi. I'm sure that Mr. Matthew has taken notes. I want him to take additional notes, right? So, Michael, I want to find out, do you completely agree with what Mr. Matthew has said with respect to the turnover approach, the hierarchy of rules with respect to taxation of the income of non-residents in Nigeria using the turnover assessment basis? So that maybe FRS might, before we see that almighty circular, maybe there could be some things that would help the taxpayer better in it.
You know, when I first joined the professional services, and we used to hear deemed income, deemed income, deemed income. In those days in the early 2000s and all of that. And when I came to FIRS in 2008, I actually met the persons who actually sat down and crafted this policy. People like Mr. Ogumbeson, I think Mr. Sulu, the guys who wrote these circulars in those days. And I understood the thinking behind the issue of deemed income in those days. And it was simply that, look, we didn't have mechanisms, we didn't have information on what the actual turnover of these guys were. And in order to just make sure that the tax assessment or tax collection process was not fraught with so much uncertainty, we just said, okay, fine. For all the business you do in Nigeria, a certain amount of what you earn from Nigeria is given to you as your cost. The balance of it is then taxed at the CIT rate of 30%. Over the years, we've had all sorts of variations. During Mr. Fowler, I know when we did the self-assessment regulations, we then issued directives and said non-resident companies should begin to file actual returns in Nigeria with audited accounts, capital allowances, and all of that. At that time, some of us who were present there said, look, we didn't think it was the best approach, because honestly speaking, if you ask a non-resident company to file all of those, how do you even begin to determine what he or she has filed? How do you validate the information provided to you? Now we have gone back. It's almost as if we have come full circle again in the law, and we're back to the whole issue of deemed income. For me, again, I align myself with Dr. Titi. It's all about certainty and taxpayers knowing what their obligations are so that they can comply with it. In an ideal world, I would like Nigeria to tax everything that is available for it to tax, i.e., whatever revenue is derived from our, from Nigeria, and whatever profits are made in Nigeria, we would like to tax them to the full extent that we can. But we're also not an island. We operate within a context, and we're a very strong, at least while I was in FIRS, we're a very strong member of OECD, and I believe that even up till now, we have representatives in the United Nations Committee of Experts in Taxation. I know Mr. Bonjibola has a seat in that particular committee. The former chairman Fowler was part of that committee. I used to go for, committee meetings at United Nations. We had all sorts of input that we used to make into, deliberations at OECD and all of that. So what I will advise simply is that, look, Nigeria is a member of the global community. We cannot behave as though we're not part of these deliberations. We are part of the deliberations. There's also the aspect of, wanting to protect, what you think is right, your taxing rights and all of that within your own borders. But at the end of the day, what I said, what is important at all times is that taxpayers come into Nigeria knowing what their obligations are in Nigeria, and they are clear about what their obligations are, so that it is not one rule today, another rule tomorrow. And also for us as tax consultants and advisors, so that when we're advising you, we'll say, look, if you come into this country to do business, if you earn revenue, if you make profits, this is what is expected of you. So we'll advise and we'll always recommend that FIRS should make rules that are simple and can be easily implemented. Do not make rules that will, at the end of the day, be difficult to implement, both for yourself and for the taxpayer. So that's the extent of the advice I'll give. Any other thing apart from this, Mr. Matthew will have to pay me. So we'll leave it.
Thank you very much, Michael, for that. We just have about 10, 11 minutes to the end of this session, and I must confess it's been very insightful and very engaging. I would like to come to Chinedu very quickly. There is a new excise duty rule on non-alcoholic beverages. What do you think the impact of these would be on taxpayers and even the companies that produce these non-alcoholic beverages? How do you see it? Is it that the government is concerned about sugar intake? Chinedu.
Okay, thanks so much, Tobe. I think it's, again, following global trend. I think some time ago, WHO even advised that, the rate of obesity, diabetes, and all that, and potential costs to the global economy going forward. So there has been this issue of sugar tax that, they were pushing. There was this study that, if the cost of sugary drinks go up by 20%, that the consumption might actually go down by the same 20%. So I think that's the trend. Whether it's real or, it remains to be seen. But you know that before sugar, there is what they call sin tax on tobacco, on alcoholic beverages and all that. I think sugar is being seen again in that light, where you're trying to control consumption so that the public health impact will be managed and all that. So I think in that light, again, it may not be a bad introduction into the tax law. I think it has been long in coming. There has been ongoing discussions, in that regard. But it's part of the general trend, and I don't think it's a strange introduction.
Okay, I'll leave it open for any of the panelists to make additional comments on
Yeah,
that.
Dr.
Dr.
I would
Okay.
like to, sorry, doctor, I've worked in the industry before. So, I worked in the industry. I was part of, in fact, I was one of the people who drove the industry collaboration on the excise review that took place in 2016. It was the first of its kind where we had, the three big industry players in the alcohol industry sit down and actually come together and say to the federal government, and look, in terms of what you want to do with increasing excise on alcoholic beverages, this is how you should go about it. It was a very successful exercise, and we're able to guide the Ministry of Finance then in 2016 when they increased excise on alcohol and tobacco. Unfortunately, a similar exercise did not take place before the imposition of excise on non-alcoholic beverages. I'd just like to say, Chinedu, that as much as WHO and all these other agencies say to us that, it's, we have a sugar problem. Between you and I, we don't have a sugar problem in Nigeria. Our consumption of sugar, if you look at what the global figures are, we're down there at the bottom. I can't remember all the figures are, but I think globally, the average consumption per person in Nigeria of sugar is like 300 grams or so. It's you and I that drink Coke, as a luxury. The laborers at the site, Coke and bread for them is real food. But I'm not trying to act as an industry advocate. They haven't paid me yet. Maybe when they engage Anderson, then we will advocate for them. But what I will say is that if government wants revenue from excise, I can tell you there are 101 other places that government will get good revenue from excise. And again, so that I don't prejudice my telco clients, in 2019, in the 2020 Tax Finance Act, there was a provision to impose excise on telcos, which was going to be subject to a regulation that will be issued, by the Honorable Minister of Finance. It never happened. If you look at the turnover of all the non-alcoholic beverage producers in Nigeria, and you compare it with the turnover of just one or two of the telcos, you discover that the telcos have a higher turnover. So if you're actually looking, and excise is a turnover tax, as you and I know. So if government is really looking for quick wins in terms of revenue, they know where to go. But like I said, when it comes to consideration of what to impose tax on and who to impose tax on, you cannot limit the legislature in terms of how they do it. At all times, and this is why I always say, anytime I have an opportunity to engage with FIRS, what I always say to FIRS and also to other revenue generating agencies is that when you are going to do anything, please sit down with the industry. You see, it's just like the issue of when significant economic presence was introduced. I had significant conversations with, Mr. Bonjubola and the rest, and I said to them, look, invite these guys. They are very open and willing. They want to talk with you. And one of the questions I threw to FIRS at the last stakeholder session we had was, can we even do an impact analysis? How much VAT now is Google paying in Nigeria? How much VAT is YouTube paying in Nigeria now? How much VAT is Netflix paying in Nigeria? Let us know, because at the end of the day, it even helps us too as advisors. So that if we see that, oh, there's a lot of tax there, you and I will even go and tell these guys, oh boy, come and pay your tax in Nigeria. At the end of the day, of course, we'll act as the advisor. So even with the issue of the excise thing, I think that there should have been more engagement with the industry to say, look, we want to do this thing. Come and sit down with us. What are the rates to impose? Because I can tell you, Chinedu, with my experience in 2016, the rates are also very important. And these guys will tell you, they have their books, their production figures are there. At least for the big ones, they have nothing to hide. You can sit down with them and say, okay, if we do a 5 naira in 2022, we can do a 7 naira 50 kobo in 2023, and then we can move it up to 10 naira in 2024 and all of that. For FIRS, on the other hand, and I recall saying this severally at the meetings of the Fiscal Policy Reform Committee, excise is a cost. And so what customs will gain, FIRS will lose. So I always said to FIRS that, look, you need to follow this process. You need to also be interested. Yes, at the end of the day, it's federal government, so it's all going into federation account, but we also know that everybody likes to protect the stuff. But let us watch how it goes. Let us see. I mean, customs should also be able to tell us at the end of the year, oh, this is what we were able to collect. If it looks at like something that is viable, then fine. Why not? But like I always say, it's not just to make these rules, it's also to ensure that we're making these rules with the taxpayers, with the industry and with the entire economy in place. Because it's not just about collecting excise. You have people you have value chain. If, for example, now, Coca-Cola or any of the soft drinks becomes expensive and then consumption goes down, it will also impact production. If it impacts production, it impacts the value chain. Then they will buy less of the raw materials that they used to produce. They will buy, there'll be less haulage and all of that. So it's an entire value chain in the industry. For us, like I said, again, all we're interested in as consultants is certainty in the law. Once we see this thing, it is written in black and white, we'll advise and we can analyze. But from time to time, and I hope that we'll get the opportunity again when we start the amendments to the next, or when we start deliberations on the next Finance Act. I advised when we started the last deliberation, I said, before we even begin to look at new amendments, can we do an analysis of the old amendments and the impacts? Let us see that, oh yes, all these things we did. So for example, I would expect that FIRS will come to us next year or at the end of this year and say, wow, these new rules that we introduced in terms of taxation of non-residents, significant economic presence, this is the collection that has come in. So you guys can see it's been successful. Customs should come to us and say, we've collected XYZ on excise from non-alcoholic beverages. And so if we want to extend it to Indomie or to any other thing, wow, this is it. And for us, we'll say, well, fine, it looks like it's viable. We're all Nigerians. If government has money, it builds roads, it builds bridges, it improves infrastructure, there's uninterrupted power supply, there's improved security. I can drive in the night to go and visit Matthew in his estate, and then, we'll sit down somewhere and have a good drink without having to have armed security men guiding us. So we'll be happy if the country is a safe place for businesses and for individuals.
Thank you very much, Michael. Dr. Titi, you were going to say something on that subject.
Yes, I think Michael has actually articulated quite a number of things. But my own point of view is, when we talk about the sugar levy, the first question I ask myself is it really sugar that is causing diabetes or our diets, the intake of carbohydrates or whatever? Maybe we've not done that balancing before we thought sugar levy should come in as a sin levy. Also, if we look at when we say consumption, like Mike said, those who are really consuming these things, someone like me, I may not take a bottle of Coke in a day, but a laborer would take like 2, because by the time he's tired and thirsty, that's the first thing he will ask for, not minding the cost. I will give you an analogy of my 12 markets. The level in which they consume these things in my 12 markets amidst the so-called, in quotes, the market people is high, but they never even looked at the price. So we need to also look at that. So the key thing is the lifestyle is what really affects all these health challenges, not really that sugar. That's my own view about it. But I think in form of coming up with policies, we should not just look at one thing. Let's have an holistic review. What really is the cause? Will anything affect this? Now, Customs is saying with the Finance Act 2021, their revenue generation is going to be affected because there's a section that says FIRS will collect this, that. So we need to just be sure that we consider everything. I feel we should not just say, because we don't want people to consume, we come up with a tax. It may not be the solution. Thank you.
Thank you very much, Dr. Titi. Our time is up, but we must conclude this session very well. So I'll just take maybe additional 10 minutes before we get the concluding talks from our panelists. I'd like to hear from Michael again, specifically about the Stamp Duties Act. If you look at the Stamp Duties Act and the amendment to Section 89 by the Finance Act 2021, it appears that the taxing right is now just for the federal government. That's the FIRS now, and there is a sort of play down on how the state government should also collect stamp duties. What do you see to that? The Minister of Finance is also supposed to issue some regulations in that regard. What do you think is happening with the stamp duties?
Tokwe, it seems like you want to put me in trouble. I have some applications which are pending before Matthew. I don't want to express some opinions that when Matthew sees my applications now, he will just toss them under his table. But the issue with stamp duty is a very straightforward one. And as lawyers and as tax consultants, our job is just to advise appropriately. You see, the issue of stamp duty, as far back as 2000 and when we had the 2007 amendment to the tax laws, as far back as that time, we looked at the Stamp Duty Act and we said, look, this act is obsolete and it needed to be reviewed. For whatever reason, it was not reviewed. We didn't amend it in 2007. We didn't amend it in 2011. And so far, what has happened since we started to amend the laws through the Finance Act is some cosmetic amendments. I don't know why we don't want to touch that law, but it's a law that needs to be stripped to the bottom and then built up again. Now, let me address the issue of taxing powers in terms of the Stamp Duty Act. I think the Stamp Duty Act is very clear. Where there's a transaction between two individuals, it is the state government that has the power to collect stamp duties on such transactions. Where it is between companies, then it is the federal government. The challenge, and I'll tell you where this issue is coming from, the challenge is when the issue of stamp duty on electronic transactions was introduced. You know, initially it was introduced as a circular by the CBN. And of course, the banks are answerable to the CBN. So what happened was that it was easy for CBN to implement because they just issued a circular. No bank would joke with CBN circulars. So they were collecting, whether it was between Tokwe and Michael or between Michael and Angote PLC. Now, this money was collected and warehoused, but wasn't distributed. Over time, the states began to complain. So the FIRS or the federal government in its wisdom now then introduced the electronic money transfer levy. But the electronic money transfer levy did not solve the problem because it still went back to the issue of the dispute of VAT. What are the issues that the federal government has taxing rights upon? Taxation of incomes, capital gains, and profits, you know? But anything outside that, at least that's what the court said in the Rivers State case, is not subject to the legislative powers of the National Assembly. It is left for the states. So the issue is now, can the National Assembly legislate and impose an electronic money transfer levy on transactions between two individuals? That is the central question. Okay, now as to the arrears, that is very straightforward. Since it's been collected, the money cannot be returned to you and I. It cannot be returned to the taxpayers. So the proper thing to do is to share it between the states and the federal government, which is very fine. The issue is that the Finance Act said there should be a regulation within 30 days. And the Honorable Minister should have issued that regulation by, 30th of January. It hasn't happened. As at the time, the Finance Act was passed, I was aware that the draft of regulation, because I saw it, was with the Chairman Senate Committee on Finance. I don't know what has happened. Maybe Matthew can enlighten us on what has happened. The issue going forward is this. The National Assembly needs to be able to look at what it has legislated and determine if it has legislated strictly within its powers. And the states, on the other hand, also need to then consider whether they want to challenge the powers of the National Assembly in this regard. And there was a decision, I think, in Akwa Ibom State last week or so, where the Federal High Court, the Federal High Court, I believe, said that the Akwa Ibom State government or the Akwa Ibom Internal Revenue Service had the right to demand for stamp duties from one of the banks, I think to about 2.something billion naira. So the problem, and just like Dr. Titi has said earlier, remember, when two elephants fight, it is the grass that will suffer. So what will happen is that the banks will tell you that this stamp duty or the electronic money transfer, I've already collected and remitted to CBN because there's an escrow account at CBN. The state internal revenue on the other will tell you, I don't know about that. I've not seen the money. So, transfer the money to me or account for the money to me. So this issue needs to be resolved very quickly. But my personal opinion is that in terms of whether you want to call it stamp duty on electronic money transfer levy, if the transaction is between two individuals, then strictly speaking, that collection or that revenue or that levy should be for the state government. But for transactions between corporate entities, then it should go to the federal government. I think if we do that, everybody will be clear and everybody will collect his money and go home happy.
Thank you very much, Michael. I'm going to come to you very shortly, Chinedu. You see, there is an amendment of Section 68 of the Federal Inland Revenue Service Establishment Act. And basically, the implication of that amendment is now saying that the FRS is more or less like a sole agency for collection of taxes. and levies that are due to the federal government and the federation. So what happens to authorities like the customs, right? Do you think that amendment was properly thought through? Could there be an issue with the amendment? Is there something that we're missing from reading it from a literal angle? Chinedu.
Okay, I mean, thanks. I think the amendment was trying to solve some problems. You know, over the past couple of years, there was instances where, you know, a lot of other government agencies were trying to play the role of FRS. You know, at some point you had even the Ministry of Justice doing tax review audits and issuing tax queries. You had EFCC investigating tax matters. You had National Assembly committees appointing consultants to go and review tax issues. And going back to what it is said, when you then have one company having 4 or 5 different tax audits going on at the same time, you know, it just creates it becomes chaotic. So I think that regulation was trying to streamline things in that regard, because you found out that at that point, FRS couldn't call those guys to order. Everybody was, you know, doing whatever they liked. I don't think customs will be affected by it. I think the Customs Act is clear in terms of what customs should oversee. Even the excise duty we just mentioned, you know, it won't fall by fire. I think customs will deal with that clearly. So I think that provision was trying to solve that problem, and hopefully it will help, because it goes back to what we're talking about, simplicity and orderliness, you know, in approaching things. When you have, you know, EFCC coming to investigate taxes, it just doesn't make any sense.
I'm sure Mr. Matthew, I can see his nod. He's happy with Chinedu's response in that light. But we can only hope that your circular will not say otherwise. That, of course, FRS know the limits of its powers so that it's not overreaching beyond what tax types or levy types it's able to collect. But I'd like to hear from you, Mr. Matthew, without belaboring that point, that how exactly is the FRS thinking with respect to driving compliance for things like the NASENI levy, the police trust fund levy? What's the FRS thought about driving compliance in that regard? And then I'll get final thoughts from all the panelists.
Yeah, thank you very much. I don't want to make, okay, let me, Chinedu actually hit the nail on the head on the issue of section 68 of FRS. Thank you very much for making very clear that FRS is now the sole primary agency of government for administration, assessment, collection, and enforcement of taxes, except where the minister issue regulation as approved by the National Assembly. I don't want to bore you on that. But let me go straight to the question on NASENI and Police Act. You could recall that these acts have been there. Let me start with the Police Act. The act have been there since 2019. In that provision, no agency of government or no tax agency was given that responsibility to administer that tax, that levy. So FRS has not been given that power to administer the Nigerian Police Trust Fund levy, and it's on 0.005% of net profit, which is 5 naira to 100,000 naira profit. It's just for everyone operating business in Nigeria to contribute to the pool. What was created was a fund, and apart from the levy, there's another fund, that is another revenue stream that goes into that fund. So for the levy, it will be on 0.005% of net profit. So when a taxpayer is filing his annual returns, they also need to compute the National Police Trust Fund levy and pay that levy. 5 naira on any 100,000 naira profit. This is just to me, is just a token. So if you make a profit of 1 million, that's about 50 naira. Make a profit of 10 million, that's about 500 naira. So you can see it's just for you to contribute your quota because of the security funding, and the security system we have in Nigeria, so that we can support in the funding of Nigerian police force, in the training of the Nigerian personnel, and also to get more sophisticated and modern infrastructure. So that's for Nigerian Police Trust Fund levy. That levy is payable by every company operating business in Nigeria, whether small, micro, medium, or large companies. Every company must contribute to that pool. So I know someone wants to argue, why impose more tax on small companies? Small companies that make profit of 100,000 naira, just pay your 5 naira. You make profit of 1 million, very few make profit of 1 million, just pay 50 naira. So just a contribution to that pool. So that's for Nigerian Police Trust Fund levy. It has been there since 2019. FRS has now been given the power to administer that tax. Now for Naseni levy. Naseni levy is now streamlined to only 6 sectors: the banking, the mobile telecommunication, the ICT, the maritime, the aviation sector, 6 sectors. And this levy is imposed where any of these companies has a turnover above 100 million. So that tells us that micro, small, and medium enterprises are exempt from this levy. So, and that is only payable by large companies as defined by Section 105 of CETA. Companies that have a turnover of 100 million and above are to pay this levy. So, and this levy is 0.25% of profit before tax. 0.25% of profit before tax. And that also will be filed along with the annual returns. When you are filing annual returns, file this levy, the commission of this levy along with your annual returns. And the implication is just 250 naira to 100,000 profit. So if you make a 1 million profit, that's about 2,500 naira. So basically, the impact is not too heavy. I know that a lot of issues have got around mosquito of taxes that have been addressed. But basically, the Naseni levy is just to support the science and tech infrastructure. And this levy, this law has been there for over 30 years, has not been activated. So what FinanceSTANS did was just to activate that law. So how it will be administered by FRS? You file your returns. When your tax returns is due, if your tax accounting year end is 31st December, you are expected to file by June 30th. So when you're filing, file along with those levy, like you do for education tax, you do for NIDA, do for Naseni, and also do for Nigerian Police Trust Fund. And also the Nigerian Police Trust Fund levy is time bound. It's going to just be there for 5 years. So it's going to be there forever. It's time bound. So just us to be guided. So that's how we're going to operate. So, and then like I said, our circular will be out to specifically spell out how FRS will be looking at those industries and those bodies, those companies that are covered by the Naseni Act. Thank you very much.
Mr. Matthew.
Sorry, Matthew, just quick one. So the compliance, is it compliance going forward, or now that you have been appointed, is the compliance going to start from 2019?
It's now that we are appointed.
All right.
Thank you, Mr. Matthew. We're waiting for the almighty circular once again, but it's been a very wonderful session. I want to get a final comments from our panelist, Dr. Titi. I'd like you to go first.
Let me just say that it's an opportunity being on this webinar. I want to thank Matthew for the way he patiently takes the sections of the law and emphasize the collection that we come into FIRS again and again, and the compliance that is required to be done. I think we're really enlightened, especially on the police levy, because a lot of companies have made provisions when they were not sure. People like Chinedu will tell us to make provision because you're not sure, just make the provision. So now that we need clearance, guidance on this, because companies that have made provision needs to really know when would be the effective time for remittance, since we cannot go apply law retrospectively. So I think that clearance is necessary for everybody. Overall, I would want to say the Finance Act era is nothing to say that it's a good thing. We're getting to develop our tax system better, but we should also be very mindful of the economic situation. And all these things we're talking about, I would not fail to say there's a social contract between the government and the governed. When we pay all these taxes, we want to see the result. And most of the taxpayers who are in the industry are doing CSR, contributing to the economy. So they wouldn't mind, but when we are paying this, we also want government to be very considerate and to be sure that we get the dividend of democracy as much as possible. Thank you.
Thank you very much, Dr. Titi. Chinedu, your final thoughts.
Okay, thanks so much. And thanks everyone for being here and for joining in. I think it has been a good one. Like Titi said, I think the Finance Act era, has been very, very good because it gives opportunity to, identify issues and deal with them quickly. And it also makes it easy to amend so many laws. So I think it has been very good. But I don't think we need to be introducing new taxes for everything. You introduce for police, introduce for engineering, we already have ITF, we have education tax, we don't need to, it shouldn't be that whatever challenge the government has, you introduce a new tax for it. You have communication, there have been talks about communication tax and all that. I think, the tax law has been there, the tax rate is 30%, the companies pay that, and then government can manage, the income to resolve every other issue, and not having to introduce new taxes for every single thing, because it, again, it increases the compliance requirements and the number of taxes people have to pay. So I think the Finance Act shouldn't necessarily be used for new tax introduction. I think it should be more focused on making compliance easy and clarifying things. Thank you very much.
Thank you very much, Chinedu. I'll come to Mr. Matthew. You talked about making compliance easy, and Mr. Matthew has said it's just 5 naira on 100,000 naira. And my worry would then be, I want to pay 5 naira, I spend so much trying to pay that 5 naira, right? So, Mr. Matthew, your final thoughts.
Yeah, thank you very much for that. Like I said, FRS is only guided by the provisions of the law. Our job is to administer the provisions of extant laws. And the money accreditable that we collect do not go to FRS, it goes to Federation account. So I just want to put that in perspective. And also the issue of multiplicity of taxes is not the issue, it's not actually being proposed by FRS. The lawmakers in their wisdom have actually enacted this law. So ours is to administer. But I can tell you that there's a work stream that is ongoing. That work stream is to harmonize taxes, to bring all taxes into one bucket, and to ensure that we don't have the issue of multiplicity of taxes. That work stream is ongoing. All these laws that have been rolled out, Police Act, they have been there. It's just that no agency of government have been given the authority, no tax authorities have been given the power to administer. I agree with you. Even the national tax policy does not support multiplicity of taxes. FRS have been raising this issue, and when we raise this issue, our job is to administer the law. So I agree with you. There is need for us to harmonize. The work stream is ongoing to streamline the multiplicity of taxes to ensure that to ensure that you don't compound compliance problems with taxpayer, and also to ensure that we entrench voluntary compliance. I agree with you. And also, I know that a lot of impulses on educational activities. I want to also state, which I didn't mention earlier, that sector is still incentivized. If you purchase educational books and material, is still exempt from VAT. Tuition fee are still exempt from VAT. and also exempt from capital gain tax. So it's not all total withdrawal from that, that activity. Lastly, I want to use the opportunity to appeal to the taxpayers to fulfill your tax obligation, pay your tax correctly, file correctly. FRS is watching. Thank you very much.
You needed to say that.
It pays to pay your tax for national development. Everyone needs to drive domestic revenue mobilization to fix this nation. Do your part, I do my part.
And we obey the social contract.
I will do it. Thank you very much. You have a great mission. God bless you all.
Thank you very much. Michael, get your final thoughts.
So very quickly, I'm going to come from a different perspective. Yes, we've all commended the various efforts in, putting together the Finance Act. I must commend, the FIRS, Ministry of Finance, and all the other National Assembly too for incorporating consultants, professional service firms into the committee, because what it's done is that it's given us an opportunity to make input, and we've also been able to moderate FIRS, because I'm sure if these consultants were not in that committee, FIRS would, amend the SITA and impose a SITA rate at 300%. But what I want to advise, and again, I say these things because of the fact that I've been on the other side. Last 2020, just before Corona, I'd also advised that, look, when FIRS wants to do sessions like TechCom and the rest, consultants should be invited as observers. I made that comment in front of the executive chairman, and a lot of the directors or senior officers in the FIRS shouted me down. And I told them, I didn't say that we will come and begin to tell you people what to write in your circulars and all of that. We will only come as advisors, just like in the law courts. When there is a case, sometimes the court will say, oh, invite Olani Pekun, invite Femi Falana, invite Gani Femi or whoever as amicus curiae. They are not interested parties, but they are coming to give you a perspective, a third-party view, because they have nothing to lose or to gain from how that court decision is made. Likewise, if we come for events like TechCom and the rest, we will sit there when we hear people discussing, for example, let me stroke Matthew Small, stock in trade. We will not advise you. I say stock in trade includes natural gas, so that you allow it and we'll cap you there before somebody will take you to court. And now stock in trade includes even the lunch that Dr. Titi is going to buy for me when next I'm in Lagos. As long as we can tie it to the production process. But what I'm saying is that FIRS also needs to be able to allow other persons who have some knowledge, some experience, some skill, and who are on the ground. Look, we want to do this. And I commend you because, for example, you've invited us for the stakeholder forum on the circulars. It's good. But Oga Matthew, is not enough to just invite us. When you invite us to take into perspective or take into cognizance our views, don't just say we have had you. So that at the end of the day, we can all work together as partners and we will minimize the areas of disagreement or say, oh, I agree or disagree. At the end of the day, we can all implement our tax laws and we'll all be happy. I'll be happy, my clients will be happy, FIRS will be happy. Let me thank everyone that has come here. Thank you so much, Matthew. Thank you, Dr. Titi, for your time. Let me thank also all the participants, and let me thank Chinedu and Tokwe, my colleagues who have taken me out of my normal work schedule for over 2 hours. If I don't deliver on my client work today, I'll tell them that it is Tokwe and Chinedu that took me out. Thank you, everyone, and God bless you.
Thank you very much, Michael. Thank you so much, all our panelists, Dr. Titi. It's been a very great time having these conversations with you. Thank you, Mr. Matthew Oseneko. Thank you, Chinedu. Thank you, Michael Ango. It's been a wonderful session. And thank you to all our audience. Over 100 people joined us. I know some may have missed out on the reminders, but the recorded version of the session will be made available. And just to also mention that you should take some time to check out our upcoming webinar. We would have some others during the year. And there is also training that we'll be having very soon for taxpayers and, of course, their representatives on tax and regulatory outlook for 2022. So ensure you join us in those sessions, and I'm sure you would always have a very good reward for your investment of time and money. Again, thank you to our panelists and participants. Have a great day ahead.
Thank you, Tope. Bye.
Bye.